Hi everybody, this is Dan at Theta Trend. Today is Monday, October 14th, 2013. It's a little bit before 9 o'clock Mountain Time, 9 p.m., so well after the market closed. Uh, what I'd like to do today is I want to go through, this is the Theta Trend position tracking spreadsheet. So I use this spreadsheet to track all of my vertical spreads that I place using the Theta Trend system. And this is starting back in December of last year, 2012. And it rolls through about April. And then in April, I took a little bit of a break from the system, not because of the system itself, but because of some personal situations and specifically some job situations that I was going through. But at any rate, what I was doing is I was coming through here, and part of the reason that I keep this spreadsheet is so that I can analyze all of my closed trades. And I was starting to notice that we were going through a period here in March, April, where we're starting to take some losses, and the system felt like it was down a little bit of money. And so I went in, I tallied it up, and it looks like at that time, at the end of April, the system was down about $45 in that period. And so that's a 4-month period. It doesn't mean the system doesn't work. It doesn't mean that you can't make money doing this. It just means that in that period of time, the system was down a little bit of money. What's really cool here is that there's a way, and what this video is about, is that if we tweak the system a little bit, we can actually eke out a profit in the same period of time without really doing anything significantly different. And I think that's a pretty cool outcome, and that's what this video is about. But so at any rate, this $45 it was down is after commissions, and so the credit spreads themselves were up a little bit of money over that period, but after commissions we were down $45. Now what I did when I was going through here is, the nature of a credit spread is that you have two options, right? And let's just hop over here and take a look at a credit spread while we're talking about it. This is a put credit spread on FXE. And in this case, I'm short the 132 and I'm long the 127 puts. And the nature of a credit spread is that we're hoping that over time we're going to make money based on the decay of this option, our 132. And we know if everything goes the way it should go, we're going to lose money on this 127. So coming back over here, in this case, this is well, we'll go down to the same FXE trade. We'll keep it simple. We know that over time, this option, the 132 should make money, and we know the 127 should make money, or lose money rather. So I guess what I started to look at is I said, well, can we lose a little bit less money, and in doing that, make the system more profitable? So I compared two different situations. The first is instead of selling a 2-point credit spread like I was doing all through here, I went out and I found either a 4 or a 5 put credit spread to sell. And then I also compared that to just selling the naked option. So in the example over here, instead of selling the 132, buying the 127, we would just sell the 132. We'd be short a put, essentially. So we have two different situations. And I guess the alternative here, we have the 127, 132. We would be long, say, the 130 puts instead of the 127. So it would cap our risk much more. It would be up here. But what I did is I looked at those two different outcomes and I went through. The naked option was really easy to pull data for. I just pulled this directly across from the spreadsheet, and I factored in commissions. And so I knew exactly what the, profit and loss just on the naked option would be. Then I went and I pulled the open and close price for the alternative spread and netted that out. And I did that just using Thinkorswim's Think Back feature. It's really pretty slick. I can put a symbol in here, put FXE, and we can go back in time and look at the historical prices of options. I won't do the pitch on Thinkorswim. I think they're awesome, but that's another story for another day. So let's hop over here, and basically the outcome is that the system becomes profitable given different parameters. So what we're looking at here is something that I put together based on the results. And the first thing to take note of is this equation. I mean, if you could live your life by one equation, it would probably be this equation. It might not be a bad idea. And what we're saying is expected outcome is equal to the average win times the percentage of the time that we win minus the average loss times the percentage of the time that we lose. And I just wrote a blog post sometime fairly recently. It's out on the Theta Trend blog, www.thetatrend.com. Shameless pitch. Go check it out. And I go a little bit into more detail just about expected outcome and how it should shape your trading. But so what we found here is this was the pure Theta Trend system. We were looking at a 2-point vertical, right? And we were looking at a 46% winning percentage and a 54% losing percentage on average over that period of time for the 4 months. Our average win was $28.62. Our average loss was $27.80. So if we go out to the naked option, and this is sort of the most extreme case, we get an increased winning percentage. And this, I think, was one of the things that you could sense about the system, the way that it was trading, is that just selling the naked option in some cases was producing a win, even when the 2-point vertical would be losing. And so at any rate, the naked option has a slightly higher winning percentage. And then if we jump over here to the 4 or 5-point vertical, what you see is there's a slightly higher winning percentage, but I mean, I'd say 46, 48%, that's essentially the same, right? And it's less than a 50% winning rate, all right? And the losing percentage here, 52%, 54%, it's essentially the same. But what you notice is you get a big shift here. So the average win goes from 28.62 up to 61.36, and the average loss goes from 27.80 to basically negative $42. But what's interesting to note here is, like, let's take the average win divided by the average loss. Actually, let's do that the other way around. So what you see here is the average losing trade of this 4 or 5-point vertical is basically 68% of the average winning trade, whereas on the 2-point vertical it's 97%. So what's worth noting there is that when you have a ratio like this, you can have a lower winning percentage and actually turn out better, in fact, than you can when you have a losing trade that's this percentage of the winning trade. So if you're the bigger your losing trade is relative to your winning trade, the higher the winning percentage needs to be in order for the system to make money. I realize that's sort of a mouthful, but if you sort of slow this down, watch it, and replay it, it'll make more sense. But the net result of all of these things, so we already know that the Theta Trend system itself was down $45. The 4 to 5-point vertical system over the same period of time, including commissions, everything is including commissions, that ends up showing a profit of $115. This is 1.15 because everything is options decimals. And the naked options show a profit of $527. So that's the greatest. But the risk here, and I don't want everybody to think I'm advocating going out and selling naked option, is that if you wake up in the morning and you have some sort of a gap event, some sort of an unexpected news event, and at some point that'll probably happen. You can wake up with the market in your face and you'll give away some portion of this profit. Over this period of time, 4 or 5 months, it just hasn't been long enough for that to happen. It has been long enough to happen in the sense that it certainly could have happened. It just didn't happen here. So at any rate, those are the 3 different ways to look at the system. I think that the 4 to 5-point vertical is really interesting and still provides a lot of risk protection. You don't have the unlimited risk, and it's a little bit more conservative than the naked options. But I hope this helps. Please visit me at www.thetatrend.com, and if you have any questions, you can email me, Dan, D-A-N, @thetatrend.com. Thanks for watching.